And fund manager at Mirae Asset Management joins in with his take on the markets and especially the healthcare space. Vrijesh, good to have you on the show. What kind of opportunities do you see in the healthcare space because of which you thought about this fund?
See, the opportunities are huge. So if you look at the global healthcare space itself, it's a $7 trillion healthcare market, right, which is roughly around 8-9% of the global GDP, right? So the opportunity, of course, is huge. It is growing. So globally, the healthcare spending is growing at around 4 to 5%, right? The India being an emerging economy, the growth would be substantially higher, right? Because there is lots of underpenetration that is there in the emerging economies. There are lots of new therapies that have been, globally evolving and a new, cure for diseases are being, found out. So the thing is, it's an ever-growing sector. It's a secular sector that we feel. We think that the growth would be, quite good. The opportunity, as I said, it's substantially high.
How has been the response to your offering?
No, so we are not having any targets in mind. We are, we have come to the market just because we believe that this is a good opportunity. As I said, the size of the opportunity is big, and it is a secular theme. An investor could make, and obviously the valuations have corrected quite a bit, over the last 3 years with all the pain that the sector has gone through. So there's a good opportunity for the investor with a, long-term vision of around 3 to 5 years to enter the theme and generate value from the theme.
Roughly, how much of this fund will be pharma? How much will be with hospitals, diagnostics, etc.?
If you look at the universe that we are, looking at, we are looking at around roughly around 110, 120 odd companies, including all these spaces that you mentioned. The universe split would be roughly around 65% would be in pharmaceutical, and the rest would be in hospitals, diagnostics, insurance, and the other allied sectors, right? So I would believe that the fund construction or the portfolio construction would be in the similar lines, as the universe.
How are the valuations of the target sectors which you have been investing so far into?
So, if you look at the pharma company particularly, the where last 3 years you have seen major pains. The valuations, if you break it up into the India and the emerging market and the US business, so basically into 3 parts, you will see that most of these companies are being traded or being valued at mainly for their India and the emerging market business. The US market business is not being given complete value by the market. This is what we believe. And there is still growth. It is a big opportunity. The pharmaceutical market in US is roughly around $450 billion market, right? And where the generics are roughly around 50 to 60 billion, right? So there is a big opportunity to tap, right? Which is the patented market. So the remaining market is the patented market, right? So the valuations have corrected a bit. It is majorly discounting the US market per se. Right, so you are getting the business at the branded business of most of these companies. On the other sides of the businesses that you mentioned, on the hospitals and diagnostics, both are different businesses. But if you look at hospitals again, they haven't done much over the last couple of years in terms of market return, in terms of stock returns. So it's a high gestation model. So last couple of years, if you look at much of the capex that was spent over the last few years in the hospital business have slowed down substantially. So from here you will see earning growth start to happen, and ROIs these companies would be making decent ROIs for the investors to be attracted towards them. So I think over the next, again, as I said, next 3 to 5 years, you'll see a lot of value to be unlocked in the overall space.
The regulatory headwinds and US pricing issues for pharma sector getting over?
It would be a big statement for me to make that it would be over. It is, see, it's a commodity market after all. It's a generic market. There's no differentiation between a X player and a Y player who is selling the pharmaceutical products over there. So the pricing pressure is ought to happen, right? The only thing that was different the last 3 years was because of the increase in competition and the consolidation of the buyer channel, the pricing pressure actually got worse, right? But if you hear the last couple of quarters commentary of most of these players, the global players as well as the Indian players, lots of players have been mentioning that the pricing pressures are receding, right? So from the earlier high double-digit kind of pricing pressures, you are now somewhere high single-digit to mid-single-digit kind of a price erosion. Secondly, if you see the US FDA data, lots of withdrawals are happening on the ANDA front. So people are exiting uneconomical or unviable products from the market, right? So this has happened over the last 6 months. So if you look at the data till 2017, 18 to 20 products were withdrawn on an average, monthly average from the US market. Last 6 months, this number has jumped to around 5x, to around 70 products withdrawal per month, right? So, and this is what has been talked about by these companies also, that they are withdrawing or not launching products which are not economically viable in the US market. So over a period of time, again, over the next 12 to 18 months, we'll see a normalization that would happen in the US market.
Right, India-centric healthcare plays versus companies which are mostly looking outside. Between the two, which one would you prefer?
See, India, of course, is a higher growth market, I think. But having said that, US also, as I said, it's a very good opportunity. It's a big opportunity. It's the biggest generic market globally, right? So there are opportunities that would be there in the US market as well. So it would be company specific rather than market specific, according to me. You have to select your companies very prudently and look at the earning visibility, earning growth visibility, and the management quality while selecting the companies, rather than doing a macro analysis that domestic companies would do well or the export companies would do well.